Hi there, traders. This is Brad Gilbert with today's trading action. Now it's Tuesday, the 13th of Feb, coming into like the middle of the Asian session. We've got a clear risk on sentiment here on equities. That's driving the currencies as well. So very clear dollar up, right? Risk off, dollar up. That seems to be the way of it. There's a bit of the market's feeling, and I'll show you this sort of data in a second. Let me get it up. There's a bit of buzz in the market about today's CPI numbers, right? US CPI numbers, and it could put upward pressure on treasury yields. Prices down means the yields are up, right? So that's supporting the dollar and this whole risk off sentiment, right? So the dollar is looking the dark snuts just at the moment. So if I just come back to that, now where's the main action? Now there's going to be plenty on, right? You've got the unemployment data out of the UK, and sterling, it looks like it's ready for a bit of a push, right? Just keep an eye on the consensus numbers. I'll show you the forecast in a second. On News Squawk, you've got Switzerland inflation numbers, right? There's not many numbers come out of Switzerland, so keep an eye on that. If there's any sort of significant variance there, that could really put the cat amongst the pigeons. The ZEW numbers out of Germany, mainly, they're the ones I'll be sort of looking for. And then you come down to the US inflation numbers. Now, this is the key to the whole day, right? This 2.9% down from 3.4% previously is what we're looking for. In actual fact, let me just switch over here to News Squawk, because then you can start to get a bit of an idea of the ranges here. What's going to move these instruments, right? Let's go to the claimant count change. Well, UK unemployment rate, 4%, right? That's what it's expected. You got the range here, 3.9 to 4.3. So they're looking for an improvement, basically, on the previous month. Average hourly earnings a little bit lower. That can come into play, right? You see average hourly earnings drop, and that can really put the cat amongst the pigeons. No number here at the moment for the UK employment change. Then you come down a little bit further. Now, this is what I really want to talk to you about, because whatever happens in Europe, it can be corrected, or it can get another big push here from these US numbers. Now, this number here is what the Fed have been looking for. So they're looking for that drop to 2.9%. And if you look at the annual core numbers, down from 3.9 to 3.7. But you guys will know, after a lot of work here, that the range is the key to it, right? Being above or below the range is where you get a decent, really big move. So we're going to keep an eye on that. Now, don't forget, factor this into what's been happening. We've had stronger US numbers in January, right? Whether that's seasonal or whatever you want to call it, you've got to think it's got to eke into the US CPI numbers. So I'm thinking if we get a number here up like above 2.9, but closer to these highs, it really rolls back any prospects for a May, maybe June, maybe July, August rate cut, right? I actually think the non-farms and the other numbers were a bit of a hoax, a bit of a seasonal thing, and I don't think inflation's going to be through the roof. But that's just my hunch. But keep an eye on these numbers as we go, because 2.9 is good, below 2.9, but below 2.7, we're going to see the dollar scream off. Above 2.9, I'd say in the threes, you'll see the dollar rally aggressively. Right, and that sets us up for some opportunities here, because there are some instruments here that do look primed. To me, euro downside, dollar Swiss upside, right? Strong US numbers, that looks like, to me, the best sort of route. Funnily enough, these two instruments, even if we got weak numbers, might see a good correction. If you're looking at trading sterling, don't forget, you've got to sit back and see what happens with the UK employment numbers, and then overlay this US CPI numbers on it. So it's hard to sort of say, yeah, it's a great chance to, like at the moment, it looks like, yeah, if we got weak US numbers, it'd go up. But if we got really weak UK employment numbers, well, then it's already going to be down here somewhere. So it changes the picture. To me, euro and dollar Swiss seem to be the two best pairs. Aussie and Kiwi sort of just drifting around. They'll move with whatever happens to the euro, right, or dollar Swiss. But I'm going with the big dollar pairs, euro and dollar Swiss here, for the opportunities on the US CPI numbers. Now, just on that too, don't get all excited. Like, this is what we've been looking for from this US CPI number is direction, right? We want to know if inflation is actually falling or not, because that gives us overriding direction for the US dollar. Is it a good trading event? Well, it's going to be volatile because there's so much anticipation around it. So just be aware, if you are looking to trade the event, maybe a small trade size, but once we get the answer, that's when you'll get the better opportunity to place a trade. Of course, we might see it move substantially, but you know what? At least you're not getting kicked out on volatility. And I can tell you what, that's a hell of a disappointing situation. So after the US CPI numbers, keep an eye on the US Treasury yields. If the prices fall here, like they're red, it means the yields are going up. That means the dollar's going to rally. Okay. Higher inflation numbers, you've got to expect the equity markets to get hit. Euro, sterling, Aussie, Kiwi to go lower and the dollar higher, and vice versa if we get weaker numbers. All right, guys, this is the main trade day. Trading the event is a little bit risky, but maybe opportunities. See how the market's reacting in the final minutes leading up to it. It'll give you an idea of the liquidity in the market and if it's worth trading live. Otherwise, just hit it like 10, 20 seconds afterwards. If you see a spike either way, wait for the retracement and then jump in. All right, guys, all the best. Good luck. Cheerio.